What's up, everybody? Christopher here, founder, PaulateTrading.com. And I'm going to follow up a video I did yesterday on kind of where we are post Bitcoin ETF. I got another number of questions. And first of all, PaulateTrading.com, subscribe to the newsletter. You'll get access to a lot of my analysis. I don't do in videos, I don't do on tweets, I don't do everywhere else. PaulateTrading.com/lab and PaulateTrading.com/crypto. You can get involved with what we're doing over there. I'm going to start doing a heck of a lot more of these videos. So please like this video, subscribe to this video, and if there's stuff that you want me to cover, please comment down below. I will just, this is what I want to be doing here, is spending my time talking to you guys, in addition to my trading and working with the our traders. So yeah, give me the, let me know what it is you guys are looking for, interested in, your thoughts, your perspectives, and we'll do it. I've been trading for 25 years, been in technology for about 25 years. I've been trading crypto for about 11 years. Addition, I was, military, worked in the government, have lived overseas, speak multiple languages. I have a different perspective than a lot of people, I think, in a lot of the crypto stuff. I'm not just here for the single pump. I do love a good pump. I do love trading a good meme. Happy to get on board with all the fun and all that stuff, but also I understand risk management, and I understand this money is your money, and there's real repercussions to a lot of these things that we do here. And so that's a perspective I want to provide you. Let's have a look right now. It's Saturday, and why is that interesting? So in 2017, there was a Bitcoin ETF, I'm sorry, Bitcoin Futures product from the Chicago Mercantile Exchange, CME, that was released in, I believe it was November, December. I think it was December 2017. And it pretty much marked the top of the crypto market. There was a alt season blow off top in January, and that was, there was a couple little pops here and there, but that was it for another 3 years. In 2021, Coinbase IPO'd, and same sort of thing. Top speculative bubble on altcoins, and then crash for a couple of years. Last week, well, a little over a week ago, the SEC approved 11 spot ETFs for Bitcoin, and they started trading slightly over a week ago. Since that point, Bitcoin has gone from 49,000 down to about 40,000. Just selling. And the reason that happened, one of the reasons at least, was on a spot ETF, if somebody buys $1,000 worth of the spot ETF Bitcoin, that ETF has to go out and buy $1,000 worth of that of Bitcoin. So if you got $26 billion of assets under management there, you should have $26 billion of Bitcoin. Well, Grayscale, the one who kicked off this whole ETF thing, they charge 2% management fee, 200 basis points. And if you were to buy BlackRock's, I think it's like 10 bips. So 200 basis points for Grayscales, or 10 basis points for BlackRock. It's the same Bitcoin, nothing different. And so a lot of that money from that, so the reason that people were invested in with Grayscale is because they could be in Bitcoin in an IRA or 401k, a retirement tax deferred account, or just a stock account. So if you didn't have a crypto account and you wanted to own Bitcoin, you just own it through that Bitcoin trust. Well, especially if you're tax deferred, it doesn't matter if you sell. There's no capital gains tax, and then you just go. So you sell the GBTC and you go buy the BTC, IBTC, or whatever it is, FBIT, whatever ticker. of Bitcoin low fee you want, and you don't realize the capital gains on that. So you're not penalized, and you just saved yourself like 190 basis points of management fee every year. So with that, that's $1 billion comes out of Grayscale, and it pretty much just goes back into another Bitcoin ETF, which is a lot of what's happened. But also, there has been big numbers of inbound. So people that weren't into GBTC with Grayscales, but were in their own, are coming in and buying the ETF. So that's also happening. So with everything that's happening, we got a bit of a supply shock. I'm gonna go over that real quick, share my screen here, and then we're gonna get into the actual analysis of what's going on. So a lot of people are talking about this supply shock. I had a number of conversations with folks after yesterday's video and email replying saying, hey, yeah, good deal on that Bitcoin deal, but I just don't see a catalyst, or I don't see a reason to get for us to go higher from here. On Bitcoin, there's no there, in 2020, it was all that excess money, and people were looking for assets to put their money in. It was a major bull market, all that sort of stuff. 2017, maybe speculation on capital. I don't know, also a bull market in equities and the US economy and everything like that. But I'll tell you this. Where will I tell you this? I'll tell you this. Right now, I will tell you one thing. The amount of pessimism in the bull market in US equities, we are at all-time highs right now in US equities. The amount of pessimism in real estate, and especially in crypto, is, and maybe pessimism isn't the right word. Maybe what I need to say is the amount of I'm just not interested anymore is massive. I can't tell you how massive it is. Like I said, I've been doing this 25 years, so I have a good feeling of, now, first of all, I'm very systematic. I use quantitative data. I use statistics. I use algorithms. I use some math to help me figure out where things are. And that comes from, you start out with a discretionary mindset in trading and investing and everything like that. And then you realize, like, I need a system. I need something that I can measure, that I can predict, and I can predict that, I'll have trades and repeat the trades. And I have an edge in the market if I stick through those. And then eventually, once you get that, then you can start seeing a little bit more of that discretionary. Typically what happens is people just go discretionary, get their ass kicked, and then leave. So when you go discretionary, then you discover systematic and quant, or whatever, a system, a method, and then eventually you get a feel for things. So most of the weight that I put on the market and most of my analysis, everything that I look at right here in the way I do this stuff, is all about the quantitative systematic approach to the market. There's small bits of discretion that I look at it, and it just gives me that bit of confidence, or says, okay, stop looking at this, start researching this over here. And as we start moving towards that stuff might be useful. So right now, we are prices on, let's just talk about the S&P and NASDAQ equity markets. They're at all-time highs. Same levels we were at the end of 2021 after that massive money printing and pandemic and all that sort of stuff. But, 2 years have passed since then. And oh, by the way, we're at, 5% interest rate now versus 0. So maybe there's some stability to it. That's an argument that people already have. Okay, rates and all that stuff. I'm not going to get too far into it. But what I will say is, in a lot of the groups that I've been involved in, and people most importantly, the people I've been talking to for the last 3 years or so, the last 5 years, I'm still talking to them. A lot of people left, but the people that are here now from 5 years ago are still here. People that have been here for a year, 2 or 3, they're gone. So they were the most excited at any of the rallies we've had in the last 2 years, and they were the most pessimist at the bottom. Um, I'd be talking to 5 people at the bottom, October 2022, October 2023. I'm talking to like 2, 3, 4, 5 people. In June 2023, there's like 30, 40, 50 people I'm chatting with about the markets and doing stuff. So we're at highs back in June, piles of people. At the lows, nobody. Lows, nobody. Highs 2021, everybody's there. So we're at all-time highs right now, nobody. Just a couple of people. Nobody's excited to trade it. When I talk about that, when anybody asks what's, we're having conversations, we're at dinner, we're doing anything like that, nobody's talking about the market. Everybody's talking about I don't know, I was thinking buying some maybe, buying some distressed Airbnbs and sitting on them for a few years or things like that. People are not talking about the market. In fact, they're probably not even talking about Airbnbs. Um, it's nobody's talking about the market, which is what you don't get at a major market top. Major market top, everybody's talking about it because everybody's got money in the market. If everybody's money's in the market, no new money can come in the market. Right now, nobody's talking about it. So let me just put that out there. In 2017, when CME Futures released that ETF, or I'm sorry, futures product, the Bitcoin futures. Thumbs up. Why did that go there? There we go. Click that thumbs up. Thank you, Bubble. Um, um, when Bitcoin launched that ETF, or I'm sorry, the futures product in 2017, that was the top of the market in 2017. When Coinbase released in 2021, that was the top of the market, generally speaking. What was different then was the Bitcoin had already gone through its halvening cycle. That means in it was 2020, you went from was it 1800? I think it was 1800 Bitcoin a day were being mined. It flipped down to 900 Bitcoin per day being mined. 2017, that would have been 3,600 Bitcoin per day being mined, down to 1,800. So that it halves the amount of Bitcoins that are produced, mined, and rewarded to miners every day. And that usually is an event that kicks off a Bitcoin rally because people have been sitting and earning like half as much money in crypto, doing this work. Suddenly they've got all this capital. There's less being made. And so now it's a little bit more scarce. So price starts going up. And so people are getting into it a little bit more. And that just causes this big uh, uh, fundamental move higher. And in all of those instances, we had been at all-time highs and we had been, I want to say, like a year past the halvening of Bitcoins. The next halvening is in April of 2024. So we're still 3 or 4 months away from that. And when that happens, we're going to go from 900 a day, Bitcoin mined per day, down to 450. So that's going to change things. We're getting to a scarce number of Bitcoins being produced every day, but demand is increasing. We can see that now that we have this ETF product, now people who didn't have a Bitcoin wallet can now get it through an IRA, a 401k, a regular, TD Ameritrade or Schwab account. And no problem. It's just there. That's pretty big. So let's go into a little bit of what some stuff that I'm looking at here. So my buddy Kyle Chaussee, sorry, Kyle Chaussee, was talking about basically a supply shock. And in fact, he's a great follow, Kyle_Chaussee on Twitter or X, whatever it's called these days. He's extremely bullish on Bitcoin, and he's kind of really big on alts, quite a bit, but he's kind of taking the stance on Bitcoin. That's pretty big. The idea that only 900 are being mined right now daily, but 5,000 to 7,000 are being bought up. It's just a huge, it's just sucking it up. One thing that happens right before a major market top in crypto, this is a cool thing about cryptos. We can see what wallets are doing. So we can see when typically what happens when a major market top's about to happen, a bunch of whales collude, theoretically, people who have hundreds of millions or billions of dollars, fiat dollars of Bitcoin. So they have their current money in cold storage off chain in a wallet, and they move it on chain on an exchange to a wallet. So why to an exchange like Coinbase? Because if I was to move $250 million worth of Bitcoin and I wanted to sell it, I would want to go to an exchange where there's potentially $250 million of transactions available. So I would go to Coinbase and Binance and these online wallets. So if I'm not looking to sell, I don't leave my cold storage. It stays in the wallet, right? But when it comes onto a wallet, that's where it's going to be moved. Now, they may just be going, I'm just going to stake my Bitcoin, or I'm going to take my Bitcoin and swap it for Solana or something. Totally doable, but usually what happens is they swap it for USD or something. What we didn't see this time, what we didn't see, you can see we saw these swings, wallets coming on exchange and dumping. We did not see that anywhere here. And so far, where we're looking at right here is this is the ETF rally. Prices going up, and wallets, nothing has come online yet. So, and there is hundreds of millions of dollars of Bitcoin, like $1 billion coming in from Grayscale to be sold daily on Coinbase. And the price of Bitcoin is, since that happened, 49,000 down to 40,000. Really not that big of a deal. Like if we look at it, like it, yeah, it's a 5%, right? From 50,000 to 40,000, 20% move, a 20% move. When we're talking Bitcoin, I've easily seen 20% sell-offs in, a few minutes in my life. This took a whole week to do. And the reason being is because, yes, Grayscale is just every morning people wake up to sell their Bitcoin once they realize, oh, I was going to do that yesterday. I need to sell my Bitcoin on Grayscale and go buy it on whatever. And so they've just been doing it. And then finally, or they wait, like, oh, it's going down now. I'm going to wait. And then finally they're just like, oh, crap. It's gone down from $48 down to $35. I need to get out now. So we're building into a story here. So before I get too detailed, when I, in our crypto group, our crew, we have a private crypto group at Paulate Trading. It's limited. There's only a handful of people that have been allowed to join and are currently in it. We're not going to have too many more. I guess reach out if you're interested. We have some proprietary algorithms and a full trading system to trade the macro. Where is the crypto world at right now? And then individually, like, okay, how does that get down to, okay, what am I buying today? What am I selling? Where am I putting my money? What am I doing? Am I buying, like altcoins? Am I in Bitcoin? Is Link doing as Ethereum? So that's what we do there. But it is all based off of this right here. And this is, let's take that square off. We don't need it. This right here is Bitcoin all the way back to the first time it started trading online in August 2011. At least that's the furthest data we have on Bitcoin back to 2011. This algorithm that I use got long back in 2016 at $500 and sold 2018 at 11,000. So it missed the 500 to 11,000. It missed the 500 to 20,000 top. But that's not what this algorithm's for. This algorithm is not to tell you to buy this and sell this. It's to tell you we're in the season. We're in the season. This was July of 2020, right after the halvening. And then we're done with the season. It went long in October and did that until It does that for approximately 18 months. So it's a long-term bull market season. This algorithm was not based on Bitcoin. It was built on the S&P 500 going back to the 1800s. It was built on bond markets for thousands of years of data. It's a momentum system. We have momentum research going back over 1,000 years. And it is highly reliable momentum. It's one of the best. It's absolutely the best way to trade the markets. And, it's also, what do you know about Bitcoin? It's the most painful, right? It goes nosebleed heights and then just like rips you apart. So this was a 3-week period that it went down 40%. Well, 38% from open to close, but probably 50% if we went all the way down to it. And then it goes all the way back up again and then down. I mean, this thing is crazy. Momentum is crazy. And so what we actually do is we use this to help us say, okay, we're in the bull market. Now we've eliminated everything else we need to worry about. The only thing we need to worry about is just being long the right things in this momentum environment. So you could just be long Bitcoin at the beginning and exit at the end, and you'd be fine. You'd do great. 500 to 11,000 is a pretty outstanding return. What was this one? 10,000 to 50,000 or 45,000, 47,000 is a pretty great return anywhere in any market. Now, back to Bitcoin and the CME. The Bitcoin futures actually accounts for a lot of volume. It is let's see, Bitcoin volume by exchange. Let's just see. I obviously don't need. I don't think they have CME. Where's the one that I'm looking for? All right, so I'm gonna have to go to. Let's go to exchanges. Trying to find. There's one that shows us where all the open interest. CME. Here it is. The largest exchange open interest on Bitcoin is the CME exchange. This is an exchange. So $4.78 billion currently has open interest on that exchange. Binance is the next closest one. Bybit, OKX, BitGet, blah, 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 blah. Coinbase all the way down here, 2.2 million from 4.7 billion. So that's super useful because that's the biggest exchange and it only trades Monday through Friday. That doesn't include Saturday or Sunday. So at least of the 17 billion, about a quarter of it, a little less than a quarter of it, is on the Chicago Mercantile Exchange futures. Just this one contract. And it stops trading Friday afternoon and begins again on Sunday. So it's a huge contingent. What's interesting was it gapped up 1st of December. So it closed at 39,870 and opened on Sunday, maybe Monday, at 41,000. So 39 or so. But the wick was 40,285. So it actually traded up to there. So 42.85 was the high. And from the 1st of December, it has never come back down there. On Friday, 40,003, basically 15 points away from filling that gap. So that gap was filled for the most part. I'm not here to comment on gaps needing to be filled or any of that sort of stuff. I'm saying that what happened when it did get down to there is it immediately rallied. Right? So it goes all the way down to that level. We had a gap. Even let's do electronic trade. So you can see gap up, never came down to it for a whole month and a half. And then Thursday and Friday it filled. And once it went and took out that low and got down into that level, instant rally into Friday. Okay. Mildly interesting. I know great gaps and all those sort of things are, are there and people love them. Great. I think we may have gaps above us. We might not. I don't know. I know we probably have gaps below us. We might not. I don't know. But I'm personally not focused on that itself, other than that gap was filled over the weekend. So a lot of, at least, people who were interested in gaps, or if there were orders sitting there waiting to be filled, they got filled. And if you, I'm not going to get too far into the idea, but the reason low volume gaps get filled is because there's money to be made on those orders by an exchange. Exchange makes money. In fact, 90-something% of their revenue is from transaction fees. So the CME makes all its money on transaction fees, not on providing you a chart. The data feed is like a small portion of their business. The actual transaction that they provide is where they make all their money. So they have an incentive that they can manipulate with their software to fill orders down in here. Cool. It's Saturday right now. It's Sunday tomorrow. The market's closed until tomorrow afternoon. The CME market's closed till tomorrow afternoon. Monday is when the ETFs start trading again. So we have a whole weekend of all of this being can't be done. You're gonna, a lot of craziness is going to be happening. So what's going to happen? Traders are going to start going to find other things. That's this chart. This is a chart of it's called others, total 3. These are basically alts, not Bitcoin, not Ethereum. This is all the shit coins. You can see Bitcoin. This is today. So basically not even 24-hour period. So last night at 10 o'clock, maybe we can do it from the close. Time to the close, 1500 in my time. So so this is a chart of when the market closed on Friday, yesterday. The leader is this thing called others and total 3. They represent everything except Bitcoin and Ethereum. They represent the biggest, all of the altcoins. Everything else, Dogecoin, Solana, Link, Immutable, Matic, Binance, Shibu, Uniswap, Immutable, Injective, Arbitrum, everything except Bitcoin and Ethereum. And what are they doing right now? Rippity ripping, right? They're off and moving. So let's go have a look at something like Gecko. And we'll just do, let's do all of them. And let's do 24-hour change. Yes. Chili's, Siacoin, Dogecoin, Aster, Flare, The Graph, ICP, Conflux, Multiverse, Axie, Infinity, Shiba Inu, Matic, Mana, Theta, Cardano, BitTensor, Uniswap, Tezos, Phantom, Chronos, Frax. All these things are what's moving. I just sorted by volume. I'm sorry, 24-hour change. Chili's has a $900 million market cap. Siacoin has a $600 million market cap. Doge has a $12 billion market cap. So you could do something like this. Um, well, sign up and do your own thing. But let's take a look at Doge. In the last 24 hours, Doge has gone from about 7.9 cents to 0.84. So 084, 079 to 84. So a nice, probably a 10% move or so. Let's have a look at Chili's. Yeah, 8% there. Siacoin, 11%. Chili's just pounded, just straight pumping. And believe it or not, let's look at this for the last month. No. Yeah, it really hasn't been doing very much. Yeah. Not all that exciting. It's just we had a move at the beginning of the week, slam down and right back up. So what does that tell us? What it tells me is the casino's on right now. People are trading over the weekend, getting into crap. It's highly speculative. Bitcoin's closed, and it's just low volume tinkering right now. There's no leadership from well, let's do market cap. Let's sort by the largest market cap. Bitcoin up 0.3, 30 basis points. Binance, Cardano is the only thing, and Doge are the only top 10 market cap tokens. So the difference is this is 800 billion Bitcoin. Doge, the number 10 biggest, the 10th biggest cryptocurrency out there, a meme coin, is 12 billion. So it's like a 12 billion to 800 billion. So when Bitcoin is not doing anything and Ethereum's not doing anything, then you get the toy. People are tinkering. People are shopping. And notice our shopping list here. We went over yesterday. Some of these names aren't even really moving. I think Link is. Link, yeah, up 2%, but nothing really big. Nothing really all that big. Let's take a look. So Link's not really doing anything. Let's take a look at Doge and just see what it's doing. Yeah, I think Doge is starting to rip here a little bit. Solana, which I believe is probably closer to a $700, $800 token within maybe 5 months from here. Nobody's even touching it. ICP is doing a little movement, 4%, but really not doing much, I think. So our shopping list is ready to go, but there's nothing happening. So the point being is we are still in the early stages. There's the money that if it's selling from Bitcoin at the end of a big move in crypto, it's moving into Ethereum, it's moving into Solana, it's moving into the big names. And then because it just happened this week, Bitcoin hit that high. It wasn't like, too long ago. So we should be in prime manic trading mode. If this was the top, everybody would be trying to move their money from Bitcoin, or we would have had all-time highs in more than just brand new projects. Only thing we've had new all-time highs in is brand new projects. So all that being said, the halvening isn't even until April. So we've got a long time to go here. Long time to go. And there's still a lot to do. You can come join us, paulatetrading.com/lab. We trade every day, trade S&P, NASDAQ, gold, silver, sugar, cotton, wheat, Bitcoin, Ethereum, Solana. We trade crypto, we trade futures, we trade stocks. And if you really are just focused on like you want to be in with a group doing algorithmic stuff and building and getting in early, and we're going to limit the group. That's paulatetrading.com/crypto. And there's only a limited number of people there. It's not cheap. So I'm not like shilling it to a lot of people. It's just kind of, you get in and that's it. And that's where, we've got some pretty good people in there already. So please, again, do like this video, subscribe, and I'll see you on the next one, fam.